Welcome to the Profit Answer Man, David Barnett. Great to have you back again.
Hey, Rocky, it's great to be back. I always enjoy stopping by for a chat with you and your audience.
And I love stopping by with you, especially around Christmas time. We have
That's
just a
right.
wonderful kind of Christmas chat, and always fun. Always meet nice new people too. Just whoever is coming and going before me.
Yeah, that's a fun. My Christmas Eve special is a lot of fun. I look forward to it every year.
So let's remind everyone. Tell us a little bit about who you are and what you do.
Yeah, sure. So I'm a former business broker. I ran a business brokerage for 3 years. Sold about 3 dozen companies here locally in my own region. Before leaving the industry because of the crazy, chaotic cash flow roller coaster that business brokers often live through, it didn't help that I was also a broker through the years of the great financial crisis. But I left, became a banker, and that just like those famous gangster movies, they kept pulling me back or what have you. I ended up getting constant phone calls from people that were trying to do small business deals. And so I started a consulting business where I help people buy and sell businesses. But instead of the brokerage model, where it's based on a commission earned when a business is sold, I follow the playbook of attorneys and CPAs, where I basically have a menu of services. I do things for people and I bill them for that. So I work with buyers and sellers, promote myself online through social media, and I work with people all over the world. Based in Canada, but about 80% of our clients are in the US.
Nice. So we're here to talk about your new book that just recently came out, Buying versus Starting a Small Business.
Yeah.
And here's the thing, because I know everyone who's listening is already a business owner, but there's a couple things I always talk about, and they know that. I'm like, having a business that is always sell ready is important. And I think what we might talk about is also understanding the mind of the buyer and what they're looking for. Because if you understand them, then you have a better way of, let's say, packaging up your offer to them too, just
Yeah.
like you do for your clients and whatever you're doing in your business. But also the fact that, and this is kind of what the funny truth is, when you have a sell ready business, it starts to be more fun. You start to make more money. And so sometimes you're just less likely to sell it. And if you do choose to sell it, you get a lot more money from that side as well.
Well, and I think the other thing too is that anyone who is currently a business owner, if they're thinking about growth and expansion, there are two avenues you can go to grow a business, and that is acquiring similar type businesses in other markets, perhaps, or planting a new flag into a new market. And so, if you've been considering one of those two things as well, this book would be helpful for you as well.
And you know what? That is one of the fastest ways to grow, and in a less risky kind of way to grow, because you know what you're getting into. If you already understand your business model and how you do things and what the numbers should be, and you've got good systems and processes, then when you can pick up sometimes businesses for very cheap, because you're basically buying assets and the customer list, and depending on exactly what that is, there's opportunity there. Plus the reality is most businesses that are on the small side, so six figures, they don't really sell for very much. um and so there's the opportunity to pick things up extremely inexpensively.
Yeah, that's true. The book, I called it Buying versus Starting a Small Business. A lot of people who have business experience and maybe who understand, the difficulty of getting the client base and all that kind of thing, you might assume that the book is just going to say, "No, silly, buy a business." But that's not what the book is about. The book actually compares both tracks, and I talk about the risks and rewards and the dangers in both tracks, because there are all kinds of people out there, Rocky, all the time, who do business acquisitions in a very foolish way and end up in just as risky a position as someone who does a startup. And I wanted to highlight some of those dangers to people in the book, because what I have found is that people will, maybe they want to be a business owner, and they'll think about starting a business. They'll understand it's risky. And then someone or something will cause them to think, hey, wait, I could just buy a business that already has customers in place. And they'll realize that that takes care of the customer risk problem of having enough sales. But then if they don't do the deal correctly, they end up with a different kind of risk, which is the financing risk. And so this happens when people end up overpaying for a business or don't buy a business under the right set of terms and conditions. And then they end up in a position where if they lose any of the sales, they can't make their debt service, right?
Mm.
And so, what we're trying to do as entrepreneurs is we're trying to get the greatest possible return while mitigating and managing the risks to the best of our ability. And this is why I think you have to actually keep a view to both of these avenues when you're approaching a deal. When we're thinking about starting a new location or starting a new business, you always want to stop and say, well, wait a minute. Could I acquire something here as well? Is there a good deal? To your point, is there a really good opportunity to acquire something at a reasonable price? But if you're really set upon doing an acquisition, keeping in mind the costs and opportunities of doing a startup is going to help to ground you against getting a little bit overexcited and maybe overpaying for a business.
And if you buy a business, you can get an SBA loan here in the US. So you get reasonable cost of financing. And, when I think about growing a business, I think there's two tracks. So let's just say I'm a roofer. I could buy a roofing company in an adjacent territory or
Mm-hmm.
location, or I could buy a siding and window company in my location. And so now you start to be able to offer more services and also to cross promote your services. So
Yeah,
there's a variety of ways of looking at this.
absolutely. Yep.
So at the core, though, right, we go into business to make a profit and to make money. And I know you kind of define that a little bit in the book. What does business success really mean?
Yeah. And the reason why I bring this up is because there's a lot of statistics out there that people will often point to in the world of small business. SBA default rates, for example, on SBA loans. And they'll say, look, the default rate is so low, so it must not be very risky to get into business. And the challenge is defining what success in business looks like. And I define success in business to be different than just not closing. So there are all kinds of businesses out there, this, Rocky, that somebody works there full time and the business is kind of marginal and it doesn't really make money. Maybe it does service its debt. They make their SBA loan payments on time. But the owner is not taking a fair market wage out for the hours that they put in. And maybe they put in a bunch of money of their own to get started and they don't get any kind of adequate rate of return on that initial investment. And so where are they? They're not closing, right? So they're not part of the normal closure or failure statistics, but they're not winning either. And a lot of people who look from the outside in, they see all these businesses operating. They'll make these assumptions that, this business has been open for many years, it must be successful. I have seen many instances where people have chased a hot trend. Here in my hometown, there was a frozen yogurt boom a few years ago, and a whole bunch of these places opened. And people saw the lineups, and they were like, "Wow, there's all kinds of money in frozen yogurt," and they went and opened all these places. I actually had the chance to see some of the financial statements for a couple of these places, and they were losing money. Right. And what I can tell you today is that frozen yogurt is like the nightclub business. They have to make their living on just a few hours a week. And so for frozen yogurt, it's after school and after supper. And other than that, the places are empty, right? And so if they don't make it in that very short window of the day, they have a hard time. And so what eventually happened here in my local market is as people reached the end of their 5-year leases on these retail locations, they just started closing. And now today, I think we've got one left. But at its peak, I think we had 7.
I'm noticing car washes show up everywhere. I heard PE is overpaying for them at the moment.
I've heard that too from someone who used to own 2 of them. And I can also remember a coin op car wash boom that happened here in my local market as well. And a couple of those places have been converted into other things. The bays where you put the coins in or use a card. A couple of them now are used car dealerships and stuff like this, where you can tell by looking at the building it used to be a car wash, but now it isn't.
It's amazing how these things happen. And if you don't look at the numbers, you don't realize this. And you said something that was very important that I think most people miss. You invested in this business. You deserve a return on that capital investment above and beyond a reasonable salary.
Right.
And you should have a plan in place to show you how you're going to get a reasonable return on that money. And I don't think most business owners think that way.
I know for a fact that they don't. And the reason I know for a fact that they don't is because I'll often bump into this when people start talking about the idea of getting an investor in a deal, whether it's for buying a business or starting one. And they'll say to me, I was talking with this investor, but their expectations of yield on their capital, if I put that into my numbers, the business can't support that. And I'll say, that's interesting to me because what are your own demands on your own capital as far as a rate of return? And people usually just give you that deer in the headlight stare. Like they haven't even thought about that. All they've thought about is, I need to get this business. I need to get this business operating because and a lot of it I think is driven by daydreams of what it's going to be like once they're operating. But if a stranger who might put money into your deal, or your cousin or whoever it is going to be, like that you're talking with about investing in your deal, their expectations for return on capital should be the same kind of expectations that you have for your own capital, right? And you're right. I think a lot of people forget that.
They do. And the other thing is, and I think you talk about this in the book, is how growth is stair-stepped. And what
Yes.
I find a lot of times is business owners take the step before the sales start coming in, and I prefer to take the steps after the sales start coming in. So you say, hey, we're going to sell more, so let me hire a new employee. I'm like, no, 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 no. Go sell more, and then we can hire the employee. Or be careful on how much inventory you bring in, because things shift dramatically, quickly, as we saw during COVID, overnight. You never know what's going to happen. And there's a variety of things that can happen. AI, or who knows? And I think you really have to look at your business and model it to say, how much is growth going to cost me?
Mm.
And do I have the cash to be able to fund growth? Or did I build a business model that I can grow and not have to pay the cash till later?
Yeah, yeah, great points. And I think this is a reason why a lot of small businesses, that you actually hear a lot of these stories of retrenchment, right? Where someone will say, at one time I tried to grow bigger, and then I couldn't manage all the crews or the staff. I needed to hire this sort of middle management person, and then once I did, there just wasn't as much money in it, and I thought, hey, why did I double the size of my company if my profits haven't grown? And then maybe they have a misstep with or somebody leaves, or something like that happens, and they say, you know what, I'm going to go back to the way it was. And this is often why we see some of these small businesses that maybe have been the same size for 20 years. I talk with this a lot with business buyers. They'll be like, I don't know why this guy hasn't grown the business. I'm like, well, have you had some heart to hearts with the person? I mean, maybe they have. Maybe they've chosen this particular size for a reason, because they may understand the risks of growth a little bit more than you think.
And I know in the book you talk about the first couple million is the hardest. And I think for a lot of business owners, they don't realize this. Like, you're sub $500,000, you're doing a lot of the work. And because you're doing a lot of the work, you don't generally have a lot of overhead and employees. So you keep a lot of the money.
Hmm.
As you start to grow to that 1 million, 2 million, and even up to 3 million, you start bringing in employees. If you don't have good systems, processes in place, you aren't training them well, all of a sudden your costs skyrocket, and you might not be making as much as you did when it was small, going back to your thing. And you've got to figure out, where is the tipping point where I've got to get through this to this level of revenue to actually start to grow exponentially. In most businesses, I find there is that tipping point, and a lot of it is lost in the internal inefficiencies that don't necessarily show up on the P&L. So you hire an employee, let's say you're back in the trades, and they're making 5 hours of service calls a day, but you're paying them for 8.
Hmm.
Well, if you picked up those extra 3 hours of service calls, they'd all be profit. But if you don't have systems, processes, and lead flow to keep them fully busy, then you're leaking cash. And I don't think a lot of business owners actually plan out their growth like that.
Yeah, it's funny because I was listening to another podcast the other day, and a guy with a private equity background was talking about the difference between owner knowledge and institutional knowledge. And a lot of people who are out in the world looking to buy businesses, they'll use metrics like sales or cash flow as their benchmark for what kind of business they're looking at. And this guy with a private equity background, he was saying that they actually used headcount as one of their metrics too.
Mhm.
They didn't want to look at businesses that had fewer than 30 people on the team. And the reason that they had chosen that number, 30, was just because they looked at a lot of businesses that they had acquired, and they said, for every, sort of 10 people that are frontline customer facing people, you have to have a certain number of admin and middle management people. And at that 30 person mark, they determined in their experience, it was impossible for, the owner to have their finger in every little aspect of the business. And so there had to be true institutional knowledge, capability, administrative capability and different kinds of leadership available in the business. Whereas if you just happen to be in a really high margin thing, you could have revenues of $1 million and the owner could be taking $500,000 home. If it's like some kind of really IP intensive thing or consulting or something like that. And you could have a business that is entirely on the shoulders of that individual, right? And so understanding the industry that you're getting into is key. This is one of the biggest things I see buyers get into, where they'll dive headfirst into something they have no experience in as far as the industry or type of business. They'll make a bunch of assumptions, and without really knowing what you're getting into, you can really get bit. I've got a bunch of horror stories if you want to hear one.
Sure.
Yeah, so the flood and fire restoration business. I worked with a guy in Texas who called me after he had done a deal. He had bought a flood and fire restoration company, and he was told by the seller that they did work for over 35 different insurance companies. And it was only after he bought the business that he came to understand that in that world, there are these third-party claim administration companies who represent multiple insurance companies. So while there were over 30 different insurance companies they were doing work for, there were only 3 of these intermediaries, creating a shadow customer concentration. And so what ended up happening was he bought the business. One of these intermediaries decided they didn't want to do business with him anymore, and he lost over a third of his revenue, just like that. And in that one transaction, that, by buying this business, he went from all of his spreadsheets showing how great he was going to do to not being able to take a salary for the first 2 years. So in order to save his investment, he had to further donate another 2 years of his time. And if you quantify that, this guy came out of a C-level role at the company he used to work at. I mean, that's literally another $500,000 probably or more of investment into the business that will likely never be written down. And so it will never be part of the calculus of what ends up happening in this deal. But it's just another example, I think, of how people often don't take into account the value of their time. I was recently on a flight, and the airline canceled the flight. And I went to the customer service counter in the airport because I was ready to go. Like, they canceled the flight 30 minutes before departure. And the person at customer service said, "Oh, we can still get you home. You're just going to have to fly through this other city and have an overnight layover. And don't worry, we'll cover your hotel." I said, "Great." So they gave me new boarding passes, and I went to the other city, and I went to customer service there, and I said, "I was told you were going to give me a hotel coupon here to use." And they said, "Well, actually, you qualify, but we're running short on them. So you're going to have to pay for the hotel. Then you have to submit your bill through this process." And they gave me these instructions. And so I did that. And then I get this email back from the airline with some gobbledygook reason why they didn't have to reimburse me for the hotel. Now, the hotel's $200. I've already invested $200. And then I invested 15 minutes filling in their online form. Now, there is a claims process. There's a way for me to go back and try to, state my argument and argue and fight my way for this $200. But, if I invest another 15 minutes into this, I will have invested more of my own time than the $200. So what do you do? Well, the emotional, angry person who had their flight canceled wants to fight and make those jerks pay. But a rational, calm, orderly thinking business person says, "You know what? You have to just let it go. Don't invest any more time into this. It would be a very poor investment of my time to pursue this, right? And I should save my time for other more profitable endeavors." And time, I think, is probably the most critical resource that any entrepreneur ever has. and how you choose to spend it is really important. That being said, I mean, this is why a lot of people will buy a business versus starting one, because when you start, you have that risk of this indeterminable amount of time before you hit the break even point. But you can also look at a business that is for sale, and if it's overpriced, you can really make the case for, hey, I could invest far less money and even finance losses for a couple of years in building my own new thing. And that's the trade-off that we always face.
I'm guilty of arguing with the airlines. I get it. And honestly, this last one was pretty. They left my wife stranded on the last leg, and because it was only 2 hours away by car, a couple of the passengers just got together and one guy rented a car and they drove together to the other airport. So I put through for the refund only to find out the refund for that leg of the trip was $36 and change. And I'm like, oh, you've learned to play another game. Leave them stranded where it's not even worth fighting with us. And I I I made a note. I still need to file my other. We did complain again, which took 2 minutes. They gave us miles, which I'm like, okay, but still, I have to file one more complaint, but I'm not going to file it with them. I'm just going to file a federal complaint because I have a 30-year love-hate relationship with these people. It's emotional. I get it. And that's what we have to learn as business owners is to kind of step out and when to say, so be it, right?
Yeah, Rocky, you're gonna invest even more of your time, and then part of your tax dollars are going to get consumed with, the person that works at the agency who's now handling this paperwork. Like it's
I
hard to
understand
win.
that. I only have one ultimate goal here, and it is a wild and crazy goal that will never come to fruition. I just don't want the fourth bailout of the airline industry without a bill of rights for us. In Europe, if they do this to you, there's rules about how they're supposed to pay you and so forth. And I want transparency in just, hey, if you cancel a flight, you need to tell, no lying like they did to you. You need to tell the truth of what happened and take responsibility. And I know I'm trying to change the world. It's okay. I'll do it on the weekend, not during business hours. And with ChatGPT, I can get it done so much quicker. So it's okay. We're all emotional. And you know what, though? You have to be aware of your own emotional state, right? As a
Yeah,
business owner to say, am I being reasonable? And I'll tell business owners like, and I actually knew somebody in the home services business, the restoration, the the person who they did the work for took the money from the insurance company. They did all the work and they stiffed them. And I'm like, look, I understand you got stiffed. File your lien if you can and move on with life. Because if you let that mental baggage hold on,
mm,
you're going to dramatically ruin your business. So for me, I'll write the letter and move on. I won't hold it for years. Um, One of the things you said in the book was surprising. It says it's never makes sense to sell a good business.
yeah,
What?
absolutely.
Why?
Well, because they sell for such low multiples of cash flow. So, your average small business, if it sells for 2 to 3 times seller's discretionary earnings, even if you get up into the bigger ones, you might be looking at 3, 4 times EBITDA, maybe a little bit more. And so basically what that means is if you own the business and you've owned it for some time and you've enjoyed this cash flow, you've probably paid down your debts. You've got this nice, generous cash flow every year. To sell that just means you've sold by trading the next couple of years of profit. Right. And so people will often point to business owners and they'll say, that guy's getting older. Why doesn't he sell his business? Well, he's keeping on to it because it is the golden goose. It's laying golden eggs. Right. And so people really only sell these small privately controlled businesses when they need to, when they no longer can operate it anymore. And if you can get a degree of systematization in there with management and everything where you can really reduce the number of hours that you're spending, then why would you sell it? Right. And so you mentioned earlier that, it can be a lot of fun to own a business that's properly prepared for sale because it requires less of your time and you can rely more upon people that you've delegated responsibilities and tasks to, and you can let them do their thing. And so I just wanted to highlight to people that this whole idea of trading in businesses just doesn't hold much water. And I know that there was this whole industry, the private equity industry, that kind of does this, but in my world, from what I've seen, I see people acquire great businesses and then keep them forever. I've seen people build great businesses and keep them forever. And part of the frustration that people have when they go looking to buy a business and they say, I can't really find one that meets all my criteria. It's like, well, if you owned that thing, would you put it up for sale? It's just part of the understanding that it's not like houses or even apartment buildings, like there's more of a fluid market in apartment buildings, which are cash flowing assets as well.
And that makes a lot of sense. As a matter of fact, I know you talked about in the book that only 20% of businesses advertised for sale ever sell.
Yeah, and that's a stat that was reported in one of the Biz Buy Sell annual reports that they put out with statistics about their platform. And so it's not the whole universe of businesses. There's a lot of transactions that occur that wouldn't be a part of that. But there's a lot of businesses out there where the amount of investment required to how should I put this? I call them dead capital businesses or zombie businesses, where somebody invests, say, $1 million in equipment, machinery, inventory, et cetera, and then they only produce an income of 200 grand a year. And they might be in an industry where businesses are selling for 3 times earnings. Well, that makes their business worth 600 grand. But they can point around to all the things they bought for $1 million, right? And what that person has done is they've invested $1 million in something worth 600 grand. Now, if you bought $1 million worth of stock on the stock exchange and then it went down to 600,000, you would understand that you made a loss, right? But because there's no pricing mechanism in the world of small business that tells us every day what our business is worth, people aren't faced with these realities. And I even see people in this situation continue to reinvest by acquiring more capital equipment or inventory or whatever without ever stopping to understand if it makes sense to invest the money. You could be stuck in a position like that. And if you understand cognitively what you've done, you can say, okay, I made a loss in this initial investment. So what are my ways out, right? If I sell it, I realize the loss. But maybe I can, pivot this into something a little bit different, or maybe I can extract this cash flow over a long period of time and extend the life of my capital assets without having to replace them. Maybe I can drain that cash flow out and get it into some other kind of investments over time. But a lot of business owners never operate with the full knowledge. They never stop and do these analyses to understand what it is worth that they built.
And I know there's a lot of, back to what I was talking about with my airline story, there's a ton of emotion involved in this.
Yeah.
And you're like, but I paid $1 million. I'm like, yeah, but I don't care what you paid for it. I care what the earnings return is going to be to me. And that's the important thing. And I find a lot of business owners don't get that part of it. And then there's always the question of what is truly the return. And I know there's a whole bunch of ad backs that come back and forth, and sellers' discretionary expenses. And there's all kinds of games being played. But even if you've got a good business, at the end of the day, it might make sense. And what we're doing for some of our clients is, let's put a manager in place to run the business so that you can step out, and then let's create simple, easy to look at metrics so that 15 minutes a week you can go thumbs up, thumbs down, and you can get an idea, is the business running the way it is or not? And you can manage it. But that takes a very different mindset and a very different skill set, because that's what PE is going to do. They're going to come in and they're going to manage the manager in that place, and they're going to do it extremely well. And they've got whips, which you don't necessarily need to have. You can do this in a much friendlier way. But you do need to have the metrics, and even for yourself, you should have your metrics so that you know kind of what's going on in your business.
Yeah, I refer to that in my online content as the district manager skill set. So I always, point to some example, like if you think of Exxon gas stations around your city, like they've all got a manager, but that person doesn't run the gas station for a full year, then send financial statements to head office. Like there's some person in the area who oversees what's going on. And what are they looking at? They're looking at, some key numbers, how many gallons of gas, how many, what are the sales of the candy bars, that kind of stuff. And they can tell pretty quickly if something is askew with one of these locations. And then they can get in there and offer assistance to the manager to get things on track again.
And that's literally what it comes down to. And I think that's a great way to do it. There's a variety of ways to do this. And if you take the time to run the numbers, chart it out, you'll find yourself in a much better place. Is there anything we should have talked about with regards to the book, but didn't get a chance to?
No, I don't think so. I think we got a pretty good overview of how it would be interesting to a business owner, someone who already has a business to pick it up and read. I think that the biggest takeaway is to develop a greater sense of empathy for the person that might be buying your business. One of the most common reasons why a business does not sell is that the seller has inflated expectations of what someone's going to pay for. And it's funny because for most business owners, if you ask them about their customers or their customers' attitude or what their customers want, they've got a really great idea because successful business owners think a lot about their customers. When it comes time to selling your business, the business itself becomes like a piece of inventory. It's something that you are selling, and the buyer is your customer. They're buying that item. In this case, it's a cash flow producing business, right? And it amazes me how few business owners are spending any time empathizing or thinking about that buyer. And you've really got to get your mindset into understanding what that buyer's point of view is going to be and how they're going to look at your business and how they're going to value it. I just find that, business owners will get some kind of direct mail piece from a business broker that says, we'll sell your business for more money than anyone else. And then they'll daydream about their $1 million Miami condo or their new RV or whatever it is that they want to buy. And then they don't spend any time looking at it or contemplating from the buyer's point of view. They just become completely self-centered in this attitude or thought. They start spending the money in their mind. But you've got to be successful in selling your business, you've got to get yourself into the headspace that the buyer will be in so you can anticipate the conversation and what the deal is going to look like, and so that you can more reasonably, put together a package that's going to be appealing to those buyers. Otherwise, you're going to be part of the statistics, part of the businesses that are advertised that never sell.
And especially if you're selling with owner financing or some kind of payout over time, you better be very concerned about your buyer because that's your future cash flow. So you absolutely need to pay attention to that. If people would like to learn more about you in the book, what's the best way for them to do that?
Yeah, sure. The book is on Amazon, Kindle, paperback, and Audible. It's also available from my website, davidcbarnett.com, as a PDF. And if you're interested in the world of buying and selling businesses, I've got my own podcast and YouTube channel with over 600 videos and recordings now, which are all me answering questions or conversations with people like Rocky, where we talk about deals, we talk about business management, we talk about financing. And so it's just a great place to consume content if you're a deal maker or you want to be.
Awesome. And we'll put that in the show notes. Thank you so much for joining us.
Thanks, Rocky. Great to be back and visit.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.